So, hi guys, welcome to the podcast today. We have one of my close friends and a business partner and someone we all know today, Asim Ali. Now, for a lot of you who do not know, Asim is one of the top brokers in the country right now. He is a known man and really influential personality and a go-to guy when it comes to bank financing, on how to get creative in getting the next house, making investments in real estate, and a lot of realtors I know and a lot of my friends, they always use him. So thank you for coming into the podcast, Asim.
Thank you, Raghav.
Yeah, so today we really want to focus on Asim's wisdom and his knowledge about investing. And, it's an interesting time out there. So the first thing I want to really, talk to Asim about is you've seen the mortgage world inside out. You know how people are making money. Can you share a bit about, how did you get in real estate in terms of investing? How did you start?
Yeah, so pretty simple story, just like everybody else. I think I wanted to buy a home for myself at the age of 23.
Yeah.
Went through a mortgage advisor at TD, got turned on by the insurer, which is CMHC, and then went to two other brokers, service issues, went back to another guy who was working at TD, and, all he had to do was just ask me a simple question, if I could come up with 20% down payment because I had 10%. And I just took his advice and asked my mom. She chipped in for sure, at that age, that was a big help. But eventually I was buying the same house I thought I wasn't going to buy. So that experience alone, at that time, I realized that there's three people who weren't able to figure this simple thing out.
Yeah.
And the fourth guy did figure it out. And actually, till this date, he's one of the top TD MMS in the country. And that inspired me. And I thought the day I quit my job, I'm going into mortgage brokering.
That's awesome. And this was how many years ago?
Oh, this is long time ago. I don't want to share my age. So how about we just leave that as is?
I know since then you've made a lot of investments in different kinds of properties. Can you maybe share some of your experience on what kind of properties you've personally invested in or what kind of things you're doing right now?
Yeah, so, definitely I think I started off with just buying a simple home and then added on to that portfolio over time. Now, of course, with experience and exposure and having the right people within my network, I've gone into development properties and such as well. So I think that takes quite a bit. Of course, not advice I would give anybody to start off, because we often see people start off with their first investment just buying after a condo, right? And usually that's a very, scary situation. But over time, I've built a, nice portfolio, which I'm comfortable with.
Yeah. But so, we know the rates everyone's scared about the rates right now. But as people in the industry, we know that this is all a phase, it's a season. They'll go up, they'll go down, things will happen. For some people who are really eager to get in real estate investing, when the mortgage rates are going, the prime rate is almost 6%. What do you suggest? How should one become an investor right now? What's your advice to people who are like, you know what, I maybe own a primary residence, or maybe I'm 25, 30, I have 100, 200 grand through different sources, or maybe I have 5% down. How should I get started? What would you say?
Yeah, so rates are an interesting topic. Definitely they've gone up, after a long period of time. I think in the 80s, they've gone up that drastically. So, but I ask this question to people, would you be able to purchase the same home you're buying today 6 months ago? Most of the time, the answer is no. I was just talking to someone, and she asked me the same question. She was trying to buy a townhouse. The same townhouse would have sold for about $1.1 to $1.2 million in her neighborhood, and that townhouse is now $800,000 to $825,000, right? So that would not have happened if the rates did not go up. So there's definitely opportunities for people. When the rates do go up, they just have to capitalize on them essentially.
Makes sense. And for someone who's starting out right now, because a lot of, especially in our community, we see they want to really buy a detached home. It's a big thing. So do you think, if you were in your mid-20s right now and you're close, so would you wait till you have 20% down to buy a bigger detached home, or would you recommend people just buy condos or just get in any way in the market in this stage we are at right now?
Yeah, so I think we all start off from somewhere. Yeah. I always say your first property is your compromise property, or a property where it's not your dream home. Essentially, 99% of people buy their first home as just a place to live or a place to invest. So you have to start from somewhere. Now, I've seen this oftentimes. People try to play catch up. that we are going to come up with 20% down payment. That's going to take 5 years from today, and from 5 years from today, God knows where the prices are. So why don't, if I am in their shoes, I will definitely enter the market. If I have to relocate, I actually relocated when I bought my first home. I was living in Vancouver City, and I had to move to, Delta, and it was a big move for me. So, and we see that often. A lot of people move from Delta, Surrey, Langley to Chilliwack, Maple Ridge, and Mission, just because they could have home ownership. Yeah. So starting out from somewhere is the key thing. It's not the size of investment or size of home which matters.
Yeah, and then I know personally, you've helped a lot of people who started with a condo, then years later now they've bought some really good properties and detached homes, and they started with like a 5 or 10% down. Can you give me an example or share a story of, if someone was to buy, let's say, a condo with 10% down today, how does one go from there to 5-7 years, a much bigger house? What does that look like in terms of financing, or how does that journey look like?
Right. So I think it's, more simple than people often think.
Yeah.
So, you don't have to really you have to do something towards it. You have to save up a down payment for that condo and get your financing approved. But, hypothetically speaking, someone purchased a property for $500,000 today. Over a period of 10 years, the mortgage is going to be paid down. So there's capital, there's more of a down payment saved up. Their careers will move over time. Most likely there will be more family members. Maybe the individual is single at the moment, and then there's, two sources of income. So that will add on through, and help with the approval process. And besides that, the market will take care of itself over the period of 5-10 years. So, I've seen this often. Most of our clients who started off buying condos and townhouses, or even who bought homes as their first or second homes, are in much different, bigger properties at the moment, right? So it's a goal you work towards, but you start off from somewhere.
Absolutely, makes sense. And one thing you had shared with me, in general, when I was asking you about investing, is for all your rental properties, you typically hold on them long term and you keep on refinancing. You talk about how good of a strategy that is. I know a lot of people just buy something and then sell it right away, but you have a really good perspective on that. Do you want to share about that?
I think you really want to get me in trouble. A lot of my realtor friends who may hear to this, may not like this advice, but every time you're disposing an asset, there's for sure selling cost. And then there is acquisition cost when you're buying that asset back.
And capital gains.
And capital gains. So, when you factor all of those in, it's usually much better. And then the fourth factor, which is, let's say I sell something today, and a month later when I find something, the market might have moved by that time, or 6 months later, and I'm paying a different price point.
Yeah.
So when you factor all those things into account, you're probably better off in retaining those properties and adding more to your portfolio over time.
Yeah, and one thing you've shared and you've done for a lot of your clients is helping them refinance their current properties. So I know, and maybe you can give me a better example, but you talked about if someone, the value has gone up, you have a lot of creative options in which you can use market rents or good rental income and include that as part of their income and help them take equity out tax-free. Can you maybe give me an example of that or share how people are using that?
Yeah, so if you have an investment property and you sell that property, you bought, let's use a hypothetical that you purchased that property for $500,000 and today it's $1 million. If you dispose that, you're going to have to pay selling costs, you're going to have to pay taxes on it.
Yeah.
You'll have
realtor
fees, all that sort of stuff. And if you refinance it, there's just the interest cost. Let's assume you took $200,000 or $300,000 out of it, right? You're writing off your interest against your rent, and then you're able to utilize that as a down payment for your next purchase, tax-free. So this is not rocket science or inventing the wheel. This is how people have built wealth in real estate over the years, and we just tell clients this is how we're doing it, and we just show them the payments, show them the rent, how much they will have to inject into the property if there is any shortfalls, or if there's none, how much is the surplus which they can use towards then their payments on the next purchase.
Yeah, makes sense. And lately there's been a lot of up and down going with pre-sales. I know last year it was crazy hot. Right now it seems like a bit, of course, more dead than that for sure. But what do you think about pre-sales in this market?
Yeah, Raghav. So pre-sales is a very unique product. You put a very little but you risk a lot too at the same time. What we're seeing at the moment is appraisals coming less than what someone may have written an offer on 6 or 7 or 8, 9, 10 months ago. If they wrote an offer a year ago, a couple of years ago, they might be okay. But properties which were purchased in the last 6 months, definitely the appraisals are coming short. So what I would suggest to people who are buying pre-sales is you want to get your financing done at the time you're writing the offer. So it doesn't matter what the qualification rate might be a year later, or it does not matter what the appraisal comes. Your financing is locked and loaded at that point. The bank has taken the risk, given you a commitment, and now all you have to do is just wait for completion. If you end up selling that property, by the means of assigning it to someone else, that's fine. But that's okay. But at the end of the day, you still want to assess your risk and cover yourself, get your financing approved. Most people, the mistake they make, they end up buying a pre-sale and they don't do their due diligence at that time, whether they can be approved for financing or not.
Okay, no, makes sense. But so in a market like this, if someone had 5 or 10% down and they're looking into a condo, would you recommend someone new to the market go into a pre-sale or a unit which is already made and just to buy it with 5-10% down and start living?
Yeah, I mean, I think I'm a big proponent for this reason, because financing falls apart usually. People assume that their incomes will go up over time, so they'll be able to qualify later on. And people also assume that sometimes they're receiving gifted funds from family or family later on, so they then tend to put deposits on pre-sales for that reason, alone. So my point is that if the unit is already built, you kind of know what you're getting, right? And it's closing within 90 or 120 or 30-day period, whatever the completion might be. Whereas a pre-sale poses a lot of risk. So I am not a big fan of pre-sales for that reason, unless, of course, you have the means and resources to close on that pre-sale. Then by all means, go for them. And again, a lot of my developer friends are going to hate me for this, but I mean, I'm just saying it what I believe in.
So just to summarize, what you're saying is, given a choice, if you have 5% down towards a pre-sale or a unit which is made, always go for the latter, because with a pre-sale, you might have the uncertainty of financing, the future market, and then in the meantime, of course, you can still live in this unit or rent it out, so something starts coming in.
Exactly.
That's what your recommendation is. Okay. And then let's talk about this now that you've so much in financing. You've seen a lot of products. You've done so many things. What do you think are common mistakes investors make from a financing point of view, or what have you learned over the years for that?
Yeah, I think the common mistake people were making in the last little while, when rates were historically low, they weren't looking, they weren't thinking that at some point these rates will start increasing, and they have to factor that in. I think that was the biggest mistake I've seen in the last 2 years, with everyone pretty much, including people I know very closely. But we kept telling them, reminding them that just, remember that this is not permanent. So that was one thing which sort of stuck out, in the last 2 years, where people often, think about the rewards, but not the risk they're taking.
And now with this time, what is your advice to investors for the next 6 months? How should they go about the market?
Oh, I think it's a perfect time to buy. I've written offers myself recently, and I'm looking in the market. There's no better time than this. It's literally you're going to save hundreds of thousands of dollars at the moment. Looking at whatever type of properties you're looking in whatever markets you're looking in Lower Mainland or Fraser Valley, or all over BC, essentially, right? So my advice would be to take advantage of the market, for sure. Look at the payments, look at the rental income, look at your affordability, but at the same time, look at opportunities as well, which kind of fits within your budget.
Okay, makes sense. Thank you. So, Asim, you've talked, I've learned so many things from you in the way you make real estate deals. And you've shared a lot of cool stories on how you made deals. Can you actually share examples of how you go out there, negotiate deals, and what do you look for when you're investing in real estate right now?
Yeah, so there's you always look for, I would say, distressed sales, right? I mean, it might be a distressed sale or might not be, but someone might need funds to allocate them somewhere else. and that happens in slow markets quite often than you'd think. So just look for a deal where someone needs money quick, and within 3 to 4 weeks, and then try to negotiate as much as you can through your agent.
Yeah. Okay. Can you give me an example? Because I know you did a really great deal here in which you helped the client because they wanted the funds, but you eventually got such a good deal that you were able to do a lot with that.
Yeah. So I remember, just recently, a client came through the door. He needed some funds within a matter of a week. He was closing on other property. He had placed a large deposit, so he was making tons of capital. The property had already appreciated over time, and he could not close on time because his financing wasn't approved. So he needed to dispose one of his property in a matter of a week. And I just gave an offer to him, and I thought it might work, it might not work, but eventually it did work, and that was a good investment. I think I don't want to share the numbers, but I made 7 figures on that deal right there.
Wow,
yeah,
that's amazing. I need some of those investments now. One thing you always say about in a mortgage advice is you always ask people to refinance whenever possible. Can you talk to me about why people should go out there and refinance now and have cash on hand or have lines of credits and use the equity?
Yeah, I mean, it just makes mathematical sense, right? If let's say you refinance it even at today's rate at a 5.5% rate, and you're able to invest that money into 10-12% yields. Let's say, Raghav, you do a lot of private financing. Those are very common sort of yields at the moment in the market, and if you can do that, why not? Why should I not make my money work for me? So that's one way of growing your wealth. And actually, I'm going to ask you, how do you when people come to you for refinance, how do you ask people to what sort of yields do you see in the market, and do you suggest to them that they should refinance their homes in order to then go into the private space for investing purposes?
Yeah, absolutely. So I mean, that's something me and Asim work closely on. Is a lot of times when clients they want to take money out of their house, Asim is the expert in that. He helps them with rates close to whatever the bank rates are. So if they take out money, let's say 200,000-300,000 at 5-6%, whatever the rate is on their lines of credit, then they can probably invest it in private lending. And these are deals which are secured against real estate as second or first mortgages, and they conservatively make 9-12% on it. And they can also use their RRSPs, TFSAs. And I know you have used this strategy as well. You do a lot of private lending yourself, right?
Right. Yeah, that's true. So have you seen, with this market shifting, have you seen a spike in the private space at the moment?
Absolutely. I think it's one of the busiest times here because as things are going, private lending is still cheaper than a lot of the alternate options, which is, unsecured lending, credit cards, unsecured lines of credits. Those are at 15, 18, 20%. A lot of our consumers are who are looking to consolidate their debts. They don't want to break their existing first mortgage because you've got them a good rate and they don't want to get out of it. So they take 50,000, 100,000, or 150,000 short term and consolidate their debt, save money every month. And when the time is there for refinance, they're able to pay it out along with a bank refinance and get a lower rate. So I think that's a common thing we see, both of us see every day.
Right. So since there's been more demand in the private space, for private mortgages, people want to consolidate their debts or they don't want to break their existing terms. Are you seeing that there's more capital required now than ever in the private space?
Absolutely. Yeah, absolutely.
And how are you countering that problem?
Well, we have, I think, over the years, just with how we've done business, like investors are coming to us who will be like, hey, can you help us lend this money out? We have different mortgage investment funds we work with. We have individuals and investors like yourself who lend money through us. So we're just out there, something I actually took advice from you is I'm extremely aggressive about it in terms of my work ethic. I'm extremely optimistic about what we're going to do. And I mean, when you bring in value, it's always a busy time. And I think that's something I've seen with you as well, that even though market has gone up and down, even right now, you're fairly busy because you're giving value to people out there.
Right.
You're getting things done. And I know you just did one of the clients I had referred to you when everyone said no, you got it done. You had such different lenders. You got it done from a bank. You had to go through a lot of like back and forth there. And you got that done. So I know I get them to you then.
Right. So if I'm a common man, Raghav, and I want to invest money, I just own a home.
Yeah.
You know, what should I do? And I don't want to buy properties.
Yeah.
You know, I think, I'm scared of the market, and I just want to get a guaranteed yield.
Absolutely. So first, I would ask them to call a guy called Asim Ali, make sure they refinance their house and get some money out. But if you have 100 to 200,000 out there, you're looking for a good, safer option, then one of the things we can help you with is give us a call. We'll use the money, and you can use your TFSAs, RSPs, or just cash, and you can use that to lend it towards a second mortgage. And we give you all the underwriting, all the exact disclosures. We go through a strict underwriting process, and your money is secured through a lawyer as a second or a first mortgage against the title of the property. And it's usually done on a 1 or 2 year term. The average rate we're seeing is 9 to 12% for a safer deal. If you want to go up in risk, of course, the rates go up. So that is it. That's the process for that.
So I heard you say that people can invest their TFSAs, RSPs
Yes.
into private mortgages.
Yes.
Can you elaborate on that?
Yeah, for sure. So you want me to go through in detail with this?
Yeah,
Okay.
absolutely.
So what people can do is basically they'll open TFSA RSP in a certain bank, and through the common banks known for that is Olympia Trust or Canadian Western, and the TFSAs made in those accounts can be used by the lawyer to be lent against a property, and then the money they use, money they gain, is directly contributed towards that account.
Wow. So
Yeah.
essentially, if you have $100,000 in sitting in your TFSA or
Yes.
RSPs,
Yeah.
you can literally lend out that money
Yeah.
and make return on that.
Yeah, absolutely.
Right. And you can, what type of returns can you expect?
At least 9 to 12%.
Wow.
Yeah.
Wow. And that money usually collects dust in people's bank
Yeah,
accounts.
or makes 1 or 2% in their bank account. So
Right.
much better than that.
Right.
Yeah. But just coming back to the current investing landscape we're seeing, what areas do you recommend people to invest in? Because when the prices were going crazy, we saw a lot of people go to Alberta or more rural parts. But if someone had 200,000-300,000 and they wanted to buy a property, what would you recommend?
Yeah, I often see this. I've been seeing it over the years. People buy properties in other province, they relocate, and then they move back to BC because they're so wired
Yeah.
to live the life here, and they just made a quick decision. And the decision was based on emotions or based on the fact that they're wanting to own a piece of land versus a condo or townhouse. I always caution people against that because I've seen a lot of people come back to BC and then again, they have to sell their home. Now they have to relocate. So there's income loss during that time period, selling cost, acquisition cost once again. So I would definitely urge people to invest what they know and the markets they know rather than go to the unknown.
Okay. And I actually want to go through some of your more personal or more culture things for you. And I want to, so we know you've done really well in the industry. You've gotten countless awards. You're if not the top broker in the country right now. And your big principle is you made your money through, of course, being exceptional in the mortgage industry and then investing in real estate. Can you tell me more about, within the mortgage industry, you have so many people who want to get into real estate. If someone's looking to become a mortgage broker, what's your top advice for them?
Yeah, so I think I would talk about people where they fail. One, they often don't give it their 100%. And what I mean by that is they'll have a job while they want to run a business along with it. So, second, I think, people will often put in the effort to, grab information, to listen to someone, to pay, but the execution is not there, right? So those are two things I always talk about. Third, I talk about being relentless in your pursuit of success.
What do you mean by that? Can you elaborate on being relentless?
Yeah, you kind of have to, if you hear Raghav talk about his journey and he's giving some valuable advice, I think most people need to do is, they don't need to invent the wheel, just follow the advice of someone who's done it already, who's literally, telling them how to cook butter chicken. Yeah. And now you're questioning, their recipe. And I think that's what usually ends up happening is people often will start, they'll start, having doubts, right? And the moment you start having doubts, then, it's hard to.
Yeah. So you're saying whoever your mentor or coach is, just follow them. Don't question
just follow them and be relentless in, listen to them, pay attention what they're telling you, and then be relentless in your approach. And I mean, just continuously keep hammering at it. Eventually you'll figure it out, and the concepts will become more clear.
And I know you're just not just your business, you're growing your brokerage aggressively. You got some great brokers on your team. So are you currently looking for more brokers, and what do you look for when you're recruiting more brokers?
Yeah, so we started hiring a lot of brokers recently because we have a great broker relation person, and I believe in providing hands-on training, not just providing a monthly training or a weekly training session, but hands-on training. When they have live deals, we have someone who helps them put together those deals. So we're looking for go-getters. We're looking for guys who are ready to get ahead. We're looking for guys who trying to pursue not just six-figure careers, but seven-figure careers at the very least. And we have few of them already. So, they can feed off that energy, that mindset, and then the training we're providing them. And hopefully, it'll work out for all of us in the end. But we're looking for anyone who's wanting to come into the industry at the moment.
And for DLC Royalty, what's your vision? What's your goal for the next year?
I think the goal would be to hit 2 billion, which is doable. And I think, with the brokers we have in place and the brokers who are coming in, that number is going to be achieved for sure.
That's exciting. That's going to be fun. Yeah. And now just talk about in general, just coming back to mortgages. There's countless mortgage brokers out there. I know why I use you for my own deals or my friends and family. But outside of just you being you, what's different that you're still doing so well and people trust you so much? How do you think you earned that? I know your product knowledge is amazing. There's something different about this office. I know I see it in the energy, but what is that magic touch why people love coming to you?
Yeah, I think now I've sort of built a system, a team, right? And they feed off each other's energy as I talked about. But I think, just like you said, product knowledge is, it plays a significant role when it comes to client retention, when it comes to, speaking with new clients as well. And I think that's where we share our own experiences, right? I talk about what I believe in. And that makes a difference in someone's mind when they are on the edge. They're thinking whether they should, do something today or 5 years down the road. And if I'm buying properties in that given market, and I share those experiences, those resonate with people. So essentially, I just simply tell them what I believe in, and then provide them information, and there's no sales essentially, right? Just providing them value at the end of the day is what I think makes us different than most people out there. Sure.
And just coming back to, because I think a lot of us want to know work ethic, we want to learn from you, especially in the areas when you were building the business. Talk to me about what kind of work ethic did you have? How did you build the business? How did you grow this?
Yeah, so there has to be some goals you have set for yourself, right? Everybody talks about it, but that's essentially what's true. I always said, I'm motivated by someone who's ahead of me. And what I meant by that was, if I looked at someone and they were performing better than I was, I never really paid attention to the number of years they might have been in the industry, but my main focus was, what are they better in? They might be better in team building, they might be better in work ethic, they might have more knowledge, might have better lender access, could be something else. So whatever that might be, I'm gonna beat them at their own game. So it was I think, relentlessness to outperform and outlearn my competitors.
So who motivates you right now at this stage?
I think, I can share. I think Gary Morris. He's the owner of Dominion Lending Centers and Mortgage Architects, Mortgage Centers. And I think, he's done well in other areas of his life too. He's my motivator for sure.
That's awesome. And in terms of outside of, just being relentless, how do you build good relationships? I mean, I know so many brokers who ask you this, hey, Asim, how do I grow my business? How do I go out there and build relationships?
Yeah, so I think, most people, when they're talking to a referral partner, they're talking about, the specific sort of products they bring to the table and the value, the service, all the 9 yards. But I think you forget the individual you're speaking with. So focus on the individual, learn more about them, and you'll be able to nurture those relationships much better over the years than you talking about why you are why you're better than everybody else.
And I mean, just in general, I think lastly, if I want to put the angle for realtors out there, I know you work with a lot of them, you even coach a lot of realtors. What makes a good realtor? And because I've seen how realtor communication makes a difference in how well the client does. And what do you find makes a good realtor, and what kind of realtors do you really enjoy working with?
Yeah, so realtors would have to have same traits as mortgage brokers. They gotta have good knowledge. They need they need trust with their clients. Better communication, all those sort of things. What makes them really unique or better than other realtors? Again, knowledge about the products, knowing the market inside out. I know one realtor I recently met who was an expert in startup properties, right? He would go over depreciation reports, engineers reports. He would read the minutes for his clients, and he will go over all the issues pertaining to those startup units, right? Most people often would not, miss that simple thing that, this is part of their job description, and they need to understand these reports, right? Because these people are making the biggest investments of their lives. So essentially, when you've mastered that skill, and you have that sort of knowledge and you're out there where that sort of knowledge is not readily available, you're bound to do well.
Thank you, Asim. And just in general, just a really open-ended question. People are scared right now. We don't know what's going to happen with the rates. As a consumer, I don't know. I'm scared my mortgage payments are going to up. Maybe I want to invest, I want to do things, but I really don't know what to do. People are in that paralysis right now. So, sorry, short question is, what do you want to say to people out there, investors out there? Any suggestions? Any advice?
Yeah, I don't know about people. I'm not scared, to be honest, right? I run a business in the finance space. If anybody should be scared, that should be me. I have overhead costs. I have people to, bills to pay. But at the end of the day, I think there's, it's a good time for people who are looking to enter the market, or people who weren't able to enter the market 6 months ago, who were outbid by 20 other people, and they were then disheartened, or their price points went too far and they could not afford their mortgage payments anymore, or they didn't enter the market because they couldn't afford mortgage payments anymore. I think it's a good time for them to invest and go into the market.
Okay. So typically people who are Uber drivers, truck drivers, they have a hard time getting a bank financing, but I know you really are successful at that. Can you tell me some of the programs you have for them, and for someone who's not maybe been employed for 2 years?
Oh, they have a lot of programs. You could be self-employed for 3 months. We can get you financing through an alternative bank. We've been doing this for years. This is not rocket science. There's a lot of alternative lenders out there. Your own bank might not provide you financing, but we can. Banks have an A side and an alternative side, where they will literally look at your deposits and quantify the income based on the gross deposits you're receiving per month. It doesn't matter what your tax return says. We all know people write off expenses of their cars, homes, cell phones, eat outs, all that sort of stuff. We can add all of that back to your income, and essentially, you'll more than likely qualify for the mortgage, which you thought you would never qualify.
Okay, so if you're a business owner out there and been self-employed for less than 2 years, and you may not show your income on your taxes, then you want to listen to this. And with these alternate lenders, I think the rates are fairly similar to bank rates, right?
Very similar. Actually, sometimes they might be even more competitive. Yeah. We're still getting clients, a 5.89 or 5.99 rate, whereas, with all the A lenders right now, the rates are hovering 5.69 and 7.9. Sometimes they could be 0.75 basis point different than the major banks, but I mean, you're saving probably $100,000 on taxes, and you're going to pay, if your payment's going to be $200-300 more per month, so be it.
Okay. And are you able to help clients outside of BC as well?
Absolutely. We're currently, in the process of getting our licensing up and running in Alberta. It's in the final stages, and then, we're working in Ontario as well. So absolutely.
Okay. Thank you, Asim. Thank you for coming in today. Really appreciate your time and insights.
Thank you, Raghav.